Hello, everybody. Welcome to XM live trading session in the beginner's room for chart patterns and candlestick section with me. My name is Junaid Vahid, trader, analyst, and forex instructor. Started trading back in 2011, and here we are with chart patterns and candlesticks. What chart pattern and candlesticks means to me, first of all, there are the core of my trading style. Let's say not strategy, but style. My trading style is price action, swing trading. I do trade also intraday. I have quite a bit experience in my trading career for scalping. Because I had an experience in scalping, I decided to stop doing it, and that's to stay away from scalping. I did scalping last week to give you a good scalping show, give you good knowledge from my background, you know, risk management, trade management, how scalping looks like in real trading. I hope you enjoyed those that watched last week. And this week we do mostly intraday trading. Um, Everything we basically do using chart patterns, using candlesticks, using price action in general. You can use wave trading, everything that helps us to increase the probability in the direction of the market, so we can create a good trading strategy and position management plan also. So what we do this session on the candlesticks and chart pattern is we do a couple of different ways. We learn new candlestick, or we learn new chart pattern, or we learn how to trade specific candlestick and how to trade chart pattern, how to use them in combination, how to put them as a market context. So it depends what we are looking for, if we're going to use top-down approach or bottom-up approach. What they means in the top-down approach, we first look at what is the trend. Then we look if we can trade this trend by watching if there is a chart pattern to confirm the trend so we can follow it, and the signal coming from the candlestick formation. That's a simple, basic price action top-down approach. If we are talking about bottom-up approach, it's actually we are spotting a candlestick signal. We don't know if it's a valid because it looks perfect. We just need to validate it by looking at that candlestick's place. If it's within the chart pattern that we can trade, that fits well the trend analysis. Just because the trend is bullish doesn't necessarily mean that we always have to buy. Sometimes bullish trends can be exhausted. Sometimes they can be well matured. So the slowdown in the momentum of the bullish trend appears, where we will actually look to trade for a reversal that trend, not counter trend, which is a different thing, but we go for reversal, trend reversal, which is starting new direction from being bullish, changing the trend from bullish to bearish. So we would like to be early in the game, early in that trend's development. We can catch the entire or big part of it. That's a reversal trading logic. So we use chart patterns, candlesticks, trend analysis. We can support all of these if we want with technical indicators. I'm going to have session at 4 p.m. later on today. Platform time, now platform time is 1 p.m. So in 3 hours from now, we're going to add technical indicators to see how we can get help from them, where we can use them, when we can use in the trend following, in the trend reversal environment, how we can actually take advantage of these indicators, fundamental factors, sentiment analysis, everything that can help us to increase the probabilities in our trading. Okay, so what we are learning this session, as I said, maybe sometimes new candle, new chart pattern, or combination, or what we also do, directly trading the markets using candlesticks and chart patterns, any instruments. Fortunately or unfortunately, we are doing random instruments. I myself have more systematic approach on what I'm going to trade, how I'm choosing my instruments using this funnel top-down approach style. But during the educational sessions, in order to give you a good examples for the logic, so you know how to think and how to recognize and analyze them, we might do a little bit random approach of trading, which means just pulling instruments on the chart and watching if there is a chart pattern and candlestick formations that can be traded. So most of traders have this actually approach that's their trading approach. They don't have systematic way of trading and finding instruments, starting from fundamentals, going to the market sentiment, trend analysis, chart pattern, down to the signal, risk to reward, and its momentum. They just randomly looking at head and shoulder, trying to find head and shoulder on any instruments. I don't say that's bad, but it's very beginner. So if you do it and you do it for long enough time that you already grow as a trader, you should start look at for more systematic approach and have let's call a more professional, more systematic approach of trading rather than random uh, uh, random trading on any instrument that you try to find the pattern you want to trade. Still, it depends on your trading logic. Are you looking for the accuracy? If you are looking for high risk to reward positions with high probability setups, what's your trading style? These are also very important while we are using chart patterns and candlesticks. I want to say big hello to all of our friends also from the YouTube channel. Nandom Ladonk is joining. Good morning. That's actually our Nandom that is joining also the XM live, or it's a different Nandom. Big hello to you. Looking forward to your comments and questions. Which instruments you are trading? What do you trade? Chart patterns, candlesticks? Do you enjoy trading chart patterns in candlesticks? It's very interesting if you guys like them. There are traders that cannot recognize chart patterns so easily on the charts. They are not enjoying so much trading chart patterns. Sometimes some candles don't, some traders don't like candlestick formations, so they use breakouts only and not looking for the candlesticks by definition created from the Japanese investors long time ago, from the Eastern technique. Some traders can use candlesticks in completely different way, like Western technique candlestick formations from the pin bars, inside, outside bars, those kind of logic. I'm curious, guys, if you are using candlesticks and chart patterns in your trading. Let me know in the chat, drop your comments and questions. What's your experience using candlesticks and chart patterns? Which candlesticks are your favorite if you have? Of course, I think you will say pin bar, but might not. So share your most favorite candlestick formations. I also would like to know why that's your most favorite candlestick formation. So if you can share why that's your most favorite candlestick formations, also I'm curious to know, so it can open up a good discussion, valuable discussion in between us, so I can share my opinion. I check them on the charts and etc. And the chart patterns that you like, if you have some, why you like those chart patterns, how they help you better than the other chart patterns. Do you have some specific way of using than the classic way? Because how we are learning chart patterns in this session is to learn the classic way, and then I share my way of analyzing and validating the chart patterns, because most traders are using classic chart patterns by visual representation. So they say that looks like a head and shoulder. Let me try it. Okay, it's not actually validating it somehow. They are just going by the feeling and the visual represent or visual recognition of, okay, it looks like, yeah, that makes sense. Okay, this looks like a head and shoulder. Probably let's try it. Let's go. Let's short it, or go long on the inverse head and shoulder, and don't specifically have a way to validate by measuring, checking, testing if that's exactly a valid head and shoulder. Because let's say like this, I personally don't call head and shoulders when they are not valid, but I probably have to call them a head and shoulders, because I will change it in that way. Head and shoulders valid, and head and shoulders that are invalid, not valid, not validated from the market. Okay, yeah, there's shape wise it's head and shoulder, but it's not valid for me. So which is the way I do trade. Okay, so again, this session we talk mostly about chart patterns and candlesticks, but my trading style quickly, again, it's top down. I can do bottom up. In the top down, As a price action trader, I like to use wave theory from the top down, from the big chart down to the smallest charts that I can use and I need information. So there is no which time frame is best. All time frames can give you different information. I'm starting from the big time frame to see where I am in the big picture, going down to see what happens in the smaller picture and the smaller in the pattern and the wave and the small, if it's confirming the bigger wave, until it makes my picture clear. I can go as low as 1 hour from weekly. I can drop down as low as 1 hour. I can go as low as sometimes 5 minutes if I feel need for this information. If I don't need 5 minute information and 1 hour clears things out for me, so I'm going with 1 hour. I don't have to go for lower than that. So it's all about if the information I need, it's if I'm getting it from that specific combination of charts, multi-time frame analysis. Okay, why I'm sharing it, because I'm kind of expecting question from what's the best time frame to analyze chart patterns in candlesticks, and I will share also some basic information that I suggest you write it down if you are a beginner trader. The higher the time frame, the more reliable is going to be the information you are getting from. The lower the time frame is less reliable the information that you are getting from the charts. Why is that? Because on the lower time frame, think about a 5 minute chart. Every single candle is 5 minutes. On the bigger time frame, think about daily chart. Every single candle is one entire trading day. So which one have more weight in as an information? Logically, of course, daily chart, because in one candle, daily candle, you have 24 hours of trading. The entire world basically traded in it, and you have candle that entire world starting from Asia, from Europe, going to London and US market, and US market closing, getting into Asia and Australia market. So all of these traders are showing us what at the end they did, if bulls won that day or not. In 5 minutes, um, you never know in that particular moment. You can know the session, but who, why, if it's a reliable candle or not, if it's just a few traders managed to beat the other traders in terms of demand or supply, it's really difficult. Price action always gives us good information. The logic of price movement is quite similar on every single time frame. Just what I'm trying to say is the lower the time frame, the more fake signals based on our interpretations we can get, the more unexpected spikes and volatility are possible to happen. Daily also can bring more volatility, volatility sometimes, but it's not going to be the way that the lower time frame charts are giving us. Okay, simply that's the sharing a little bit theoretical part of what is good, what is not, starting from assuming that there are very beginner traders watching the session. Nandom says understand is hat. Nandom says is hat for me understand chart pattern. I do use technical by using RIS, most probably Nando means RSI by observing divergence. All right, yes, that's also a good chart pattern using technical indicator for the help. RSI, it's a relative strength index, quite good, and one of the main indicators that traders are using. And using divergences is very, very good trading strategies. Of course, if you manage to find the best positions in the trend, moments of the trend, where RSI divergence works the best, you will increase the probability of that setups or signals works better, because every single divergence not working in the same way every time. Knowing that, you need to find where the divergence works less accurately and where actually it brings more accuracy. This is based on the instrument, based on time frame, and based on the phase of the trend that you are in. Developing trend, early phase, developing phase, late phase of the trend. So it depends where you are, the probabilities might really significantly increase in your favor. All right, that's shortly. Sorry, I meant RSI and exponential moving average 20 and 50. Cool, nice. You are getting quite nice help from the technical indicators. But since the session is more designed for price action, price itself, clear and naked chart, where we have chart patterns and candlesticks, I suggest we dive into the markets by analyzing instruments with technical indicators and chart patterns, and potentially open trades if we have signals. Ioannis is here, Boyki is here also in XM chat, all of our viewers from YouTube, and Nandom in the chat. You are also invited into our XM website directly. You can watch the entire stream, the entire session directly, 9 hours a day, every day. Now, if you want to continue watching the session in the XM Live and after me, you can also join the XM. Anyway, I just wanted to tell you hi and share a few information